So we'll get into why the markets have held up so well. But first, let's do some economic statistics. Now, most of the statistics that have come out recently, that they were taken, or the measurements were taken pre-regional bank crisis. So I'm not sure we should pay too much attention to them. The positive ones were on housing. And I think it's because mortgage rates have come down since the long-term Treasury bond yield peaked last October at 4.3%. Finally, mortgage rates started to come down. So housing starts, permits, applications, existing home sales, and pending home sales all have done a little better. I mean, housing by many measures was down 40% year over year. So I suppose we shouldn't be surprised to see some rebound there. Autos they're still in recession territory at 14.82, but they came in a little better than expected. But other than that, even before the crisis, a lot of indicators were starting to signal trouble. So employment indicators like job openings have come down fairly dramatically. They peaked at 12 million at one point. Now we're down to 9.9. The Challenger Job Survey of layoffs, which are the larger layoffs, that's up more than 400% year over year. So that was kind of interesting. And then if you look at the various regional Fed indices, they're all disappointing. So the Philly Fed, the Dallas, Richmond, and so forth. Non-defense capital goods orders and shipments, both disappointing and turning down. And today we got retail sales. They were down 1% month to month. That's not a year over year number, which was much worse than the 0.5% decline expected. But here we have to come back to seasonal factors, and they are all messed up, I think, because of weather. So you'll remember in January, we got a huge increase in retail sales, 3.1%. Now it just seems to be normalizing. So in real terms, we think consumption looks about flat for the first quarter. So not doing too well, not falling off a cliff, but there is some equivocation there. And there was even before the crisis. Then we have inflation indicators, and those are all starting to look very good. The pricing impact has already started. And yet it is interesting to watch the oil price. If you look at the West Texas Intermediate, it dropped just below $70 and now is back to 80. But it has stopped at 80 regularly this year. And we, in our brainstorm today, we're talking about how much oil demand is being destroyed at the margin by the accelerated shift towards electric vehicles and electric vehicle miles traveled as we see more Uber drivers driving Teslas and other electric vehicles. In China, I believe that 25% of all car sales now are fully electric, compared to closer to 9%, I think it is, in the United States. And now this is going up very rapidly. And, commodity prices are determined at the margin, that marginal barrel of consumption. And it seems as though with electric vehicles, we're moving away from fossil fuels. So, I've been saying that we think oil prices have a long way to fall. If you adjust oil prices for inflation, since OPEC quadrupled oil prices in the early 70s, we're already below that level. Now it is adjusting for inflation. And, the lifestyle of people in the Middle East has been upgraded dramatically since that time. And in real terms, the oil price is less than it was in that time. And we think it will continue to fall. So that could be a problem. And, we noticed how China was able to basically help Saudi Arabia and Iran negotiate some kind of accord. And it's like, what is going on? These sorts of things happen when leaders want to change the topic from what may be going on in their own economies. Maybe, the loss of oil demand impacting the Middle East. Maybe China's recovery post zero COVID policies, maybe not so strong. And we are getting indicators that it is not that strong. So financial services, yes, have been hit by the crisis. That makes sense. Utilities are coming down because rates are coming down. As I'm thinking about it out loud, that should be helping the dividend yields in utilities are. So what might explain this? Well, it could be that the market paying attention in all its wisdom, even if the Fed wasn't, the market was paying attention. We were in a bear market last year, and the market was saying something's going to break here. And now we know what it is. Is there a buy on the news or a buy now that we're near the end of this? As I just mentioned, I'm not sure we're near the end of it. I don't know why deposits are going to flow back into the banking system, given current dynamics. But if we are about to experience, some people would say soft landing. So now many people looked at the 100 basis points and they said, oh, well, the last time we were here was in the early 80s. We got inflation under control with 100 basis points inversion back then. And that's true. But I think the analysis is a bit off. Nothing had broken, and then something broke. And we went back into that 5 to 6% range, which is higher than we were pre-COVID in the 3 to 4% range. Commodities are all still, many of them are down from their peaks. Lumber down 76%. DRAM prices in the semiconductor space down 66%, oil down 34%, iron ore down 34%, copper down 16%, silver down 11%, gold down 1% from their peaks. And all of them, except for gold, are down on a year-over-year basis. So again, in the pipeline, we've got deflation. Currencies, more signals there. Just to give you a sense of how wild the dollar has been, on January 8th of 21, the dollar was at 89. DXY is the trade-weighted dollar. So it's the dollar measured against other currencies according to trading with them. It went up 29% to September 30th of last year, 29%. And interestingly, what happened soon thereafter, that was the peak. And soon thereafter, the bond yield peaked. And, it's interesting to make these connections. Now, the bond has dropped, the dollar, DXY, has dropped 13% since September 30th, but is flat on a year-over-year basis. So what that tells me is that the risks associated with the dollar going up 29% were highly deflationary. We're hurting the rest of the world. And the dollar going down has given them some relief.